Hi, this is The Take, the worrying signs of India's economy diverging from the rest of the world. Stock markets in Asia have been rising this week in anticipation of the US presidential elections that will happen today. They include Korea, Hong Kong, Australia, and Taiwan. Now, these are the markets that have been rising. The US markets, already sitting on record highs, have also been ticking up ahead of the US presidential elections. The Indian stock markets, on the other hand, are down sharply in keeping with the sell-off trend that started in October and has extended into November, apparently. Whatever the reason may be, the jitteriness in the run-up to and the speculation on the outcome of the United States elections clearly has little to do with the Indian market's recent movements, even if that is being offered as a reason. Indian markets are now diverging from both Asia and the United States, and to some extent even Europe. Now, this is worrying and reflects a disconnect that could be larger than just the movement of these indices. For one, a slowdown is clearly upon us. According to a Bloomberg report last week, Jefferies Financial Group, a stock brokerage, said that over 60% of the 98 firms that they track have had their earnings per share estimates downgraded following the recent quarterly results. Now, this is the highest proportion since early 2020, when the COVID-19 pandemic upended economic activity for months. Jefferies is now forecasting that the earnings of Nifty companies will grow at just 10% in the year ending March 2025. Analysts often remind us that the stock markets are a slave to earnings. Indeed, if that were to be the case, then the slaves, so to speak, have tougher times ahead. Moreover, India's economy is now moving quite literally in the opposite direction to the United States, which is powering ahead at a pace of economic growth not seen in a long time. The reasons for slower growth in India now range from a fizzling out of the post-pandemic surge to a curtailing of consumption thanks to the triple whammy of heat waves, heavy monsoons, and of course elections. But all of that could partly be the reason, but it cannot be the entire reason. And it should also be pointed out to those saying so that hope cannot be a strategy. Now, despite the government amping up its expenditure in public spending, visible in areas like roads and railways, the private sector has not picked up the slack. Now, this is not just something that happened or did not happen in the last few months, but several years. Data shows that both private spending on capital expenditure as well as private consumption have been weak and are staying so. Companies continue to do well, though, because they're going all out to preserve their margins and profitability, including by downsizing, as the IT services companies did in the last year. So the question, as I have posed before as well, is that did we see this coming? And if so, what could we have done differently? Did the companies who are now speaking of taking a hit because of urban consumption slowing down not see this happening, or the likelihood of it 6 to 9 months ago? Did they not get a feeling that this consumption spike was more of a post-COVID phenomenon? Remember, developed markets were clearly accounting for post-COVID spikes and post-COVID spending, and thus the question to pose is, could we really have been that different? And then the financing of all of this. The Reserve Bank of India, to its credit, for more than a year has been ringing alarm bells on rising risks in micro, personal, and credit card lending and borrowing. Early signs of defaults were already there and are more visible now, and the fact that higher than normal borrowing was funding this consumption of products, services, and then even speculation in the stock markets has been quite evident and been signaled. Which brings us to the point. There is a signal and noise problem in the Indian economy. The amplification of various data points at very high levels creates a distortion effect. Now, this is not to blame those putting out the numbers, but to caution those who look at them and worse, wrongly interpret them. The question one can now pose is whether what we are seeing is cyclical or is it a more secular slowdown? It is tough to answer this question without more data, including on what really happened in the last couple of years, so we can focus on what to correct for. Meanwhile, while we eagerly await the outcome of the United States elections, we have to focus more on what is happening in our own economy.